Hi everyone, this is Natalia too with Colorado Business CPA, and today I want to talk to you about the why it is important to keep track of your fixed assets. And fixed assets, it could be tangible assets like property, equipment, furniture, or your vehicles, trucks in your business, as well as intangible assets, meaning, for example, loan. When you close on the loan, the cost of the loan, that's intangible assets. And so why is this important to keep track of all these assets on your balance sheet and file your tax returns with with all this information on the tax return? So first of all, most likely you are paying personal property taxes, which is a tax that's imposed on the tangible business property like tables, furniture, computers. So and you're paying this tax to the local companies, to the local tax agencies. So you want to make sure that the correct number is reflected on the tax return, right, on your balance sheet, because you don't want to pay more than needed. The second thing is, well, you might be missing some new assets. For example, maybe you purchased a new computer and you forgot to add it as a fixed assets, and therefore you will miss on the depreciation, right? So you can take a Section 179 or Section 168, which is a bonus depreciation, and deduct it in the first year. So you don't want to miss any depreciation expenses, and especially, depreciation expense deducts helps you to save money on taxes, but also when you want to get the loan, it will not count against your income. So it's a wonderful expense, right? So, and the third reason why you don't want to miss, why you want to keep track of all your fixed assets is because, for example, let's say you have a commercial property, right? And you did a leasehold improvements. Let's say, you invested 20, 30,000 or maybe $100,000 in leasehold improvements. And then you maybe 10 years later, you decided to fix the property again. Well, the leasehold improvements most likely were depreciated over like 39 years or 27 and a half years, depending on what type of property it is. So you still have unused cost of those leasehold improvements. And then if you already, did a new improvements, then you need to write off the old leasehold improvements, right? So you can take a deduction in 1 year, and maybe you can deduct, whatever is left of the cost of the leasehold improvements. Or for example, if you have a loans, right? You get in a loan and then you have a loan cost. So you would amortize this loan cost over the life of the loan. It could be 30 years or 15 years, right? And then let's say 5 years later, you decided to refinance the loan. Well, the old loan and the cost of that obtaining the old loan is no longer applicable, and therefore you need to write it off from the balance sheet, and therefore you can take a deduction in the year you write it off. So you can end up with a really good tax deduction, either like amortization expense or depreciation expense if it's a tangible property. So again, always keep an eye on your fixed assets on your balance sheet. If you're confused, you can talk to us. We are Colorado Business CPA. Our number is 1-800-5040-272, 1-800-5040-CPA. Our website is coloradobusinesscpa.com. Please like our video, and please post your questions and subscribe to our channel. Thank you so much for watching, and talk to you soon. Bye-bye.